Hello and thank you very much for clicking on this video. Just a very short introduction about me and my business before we get stuck into this lesson. So my name is Hugh Martin and I'm the owner of Procountancy.com, which is an official CIMA tuition provider. You can find us on the CIMA website within their tuition provider section. And I have been teaching and writing materials for all 3 case study exams for several years now. I've taught thousands of students. I've written materials that various different tuition providers have used and CIMA themselves. I started Procountancy.com to create materials that I wish I would have had as a student. So I've gone through all 3 case study exams myself as a student. I was a prize winner for the OCS. I did very well in the SCS. Didn't do amazing in the MCS, but I did pass it first time around. Now, this particular lesson that you're about to view is from the Ultimate SCS course, which we offer on our website, Procountancy.com. I strongly recommend that after you finish this lesson, if you like it, check out our website and have a look at the free samples that we offer. We have a ton of materials that we offer for free because we want people to look at our product. We want people to appreciate the quality, and if they like it, hopefully they'll buy from us, okay? Now, the course I believe is the best course that you can possibly get on the SCS, but obviously I'm biased. I believe the course is the best because it is one of the few courses in the market that actually covers off all the theory that you need to know for the SCS, and it logically has it all sequenced nicely, okay? So you just go through the course, do the assessments, do the mocks, go through the theory, and hopefully you will pass your exam. Now, we also offer a textbook. So if you're someone, maybe you don't like courses, maybe you're a bit of a self-studier, I was like this when I was a student. We also offer a textbook which includes all of the theory that you need to pass the exam, and as well we have a pre-scene analysis which is very detailed, and we have 20 subtasks and answers, and they have been written specifically for this window, okay? So we haven't been lazy, we're not just recycling various different pieces from other courses. We have written them specifically for this pre-scene, and these are questions that we think will come up in the exam. Okay, so without further ado, please enjoy this video. If you don't purchase anything from us, I still wish you the best of luck with your exams. And again, thanks for supporting us, and subscribe to our channel if you like our content. All right, let's go. Hello, and thank you very much for joining me for this lesson on pre-scene insights. This lesson is the first lesson in Unit B, and Unit B is all about the pre-scene, okay? And all lessons within Unit B are focusing on the November 24, February 25 window, which is for the company Rotomyne. So in this lesson, we're mostly going to be looking at key coverage for the pre-scene, and what this involves is taking key extracts from the pre-scene document and discussing what do we need to know about these, what are some potential scenarios that may come up, and what are some key elements of the syllabus that we should be focusing on based on those extracts. At the end, we're going to look at some pre-scene insights, and these are basically just interesting callouts that I think you should know. Now, just a bit of a warning, we're not going to be going through each individual line of the pre-scene document. I don't think there's much value in me doing that. This video would be hours long. I think the value here is to take elements that I think are important for you to be aware of. I recommend you go through the pre-scene document yourself in detail several times, okay? So the first 2 pages of the pre-scene document tend to be the same case to case. The first page just looks at the logo and this context statement, and then the next really has mostly this big table of contents in it, and then it has some key information underneath. So the first bit of that key information says that the company's name is Rotomyne, which is of course very important. It mines lithium for sale to manufacturers. So straight away we know that this is a sustainability related pre-scene. Okay, so it's mining. It's very obviously based on the environment, sustainability, and those types of topics. The next then is that you are a senior manager for this business, and that's always the case. Within the official syllabus documents for the SCS, it's actually mentioned that the role of a senior finance manager is being simulated here, not a senior manager. So even though it says senior manager, you're really a senior finance manager. You're someone who's just below the board level, and you advise the board on various different issues in this particular case. Now, the company is based in the fictional country of Poland, and despite its name, it actually has a developed country. It's got a well-regulated stock exchange, and it uses the P dollar. Okay, so what can we take from this? Well, if it's a developed country, we can assume that it has a relatively stable currency, that interest rates within the economy are relatively stable, and the fact that it has a well-regulated stock exchange, we can maybe assume, and I think this is a fair assumption, that the stock exchange has at least a semi-strong level of market efficiency. And this means that when new information about Rotomyne is released, this is going to have an effect on Rotomyne's share price because it is a listed organization. So pages 3 through 6 give us some foundational knowledge about lithium, the use of lithium, and how lithium is extracted. Lithium is mostly used for batteries, and this is the case in the real world and growing over the next few years because of the demand for electric vehicles. There's 3 extraction methods for lithium. The first is hard rock mining, and this is where we have rocks or ore being processed into dust. Okay, so they're basically ground into a fine dust. Then water is passed through that dust, and then air is pumped into that dust. And basically what happens is the lithium is skimmed off the top and then processed. Hard rock mining has a significant environmental impact, as you would expect. Okay, so as the name would suggest, hard rock mining, it's going to have an environmental impact. The use of heavy machinery creates a lot of carbon emissions, and as well, it can seriously affect soil quality. Okay, so hard rock mining has a significant environmental impact. Now we also have traditional brine mining, and this is where we have underground lakes that have what's known as brine, and brine is basically a mixture of water and lithium, and basically this brine is pumped into what's known as an evaporation pond. And an evaporation pond is a ginormous piece of land where basically this mixture, this brine, sits and it naturally evaporates over time, and what's left then are lithium deposits. Now this lithium is increased in its concentration through the use of chemicals, okay, and then it's processed. Now traditional brine mining doesn't have the same carbon emissions as hard rock mining. However, it does use a significant amount of water, and it can have a significant impact on the local environment, and in particular it can actually affect local ecosystems. Okay, because what it's doing is it's effectively drying out the land in certain areas. And in the country of Chile, we've actually seen this happen where local flamingo populations have decreased in areas where there's a lot of brine mining going on because the land has dried out so much. Now, the land can actually get so dry in certain areas that you have what's known as fissures, which are basically cracks in the land, and you can also have sinkholes as a result of brine mining. So brine mining has a lot of negative effects, okay, and as a result then this direct lithium extraction, or DLE, was developed to deal with some of these drawbacks, okay, some of these environmental effects. So DLE is another way in which we can extract lithium, and basically it is a more advanced form of traditional brine mining, and what it involves is extracting the water from the underground lake, then using solvents to basically directly remove the lithium, and then putting that water then back into that underground lake. So it has a much lower environmental effect overall because it uses a lot less water, and we don't need to have the evaporation ponds, and it uses a lot less space as well. Now DLE is still somewhat experimental, so it is used in the real world, but it's quite new. Okay, so this is probably the future. It's not necessarily the present. I could see potential scenarios coming up around the use of DLE. I could see a potential scenario where it's used as a way to maybe convince a government to give us mining rights, or possibly you could see questions around funding the use of DLE or the development of DLE. You could see maybe questions around using stress testing to test maybe an experimental process related to DLE. Those are the types of scenarios I could see coming up. Now, brine mining is the cheapest option, okay, but it uses a significant amount of water, which we said can affect ecosystems. It can also affect local communities, and this has also happened in the real world where we can have indigenous communities, so small communities in rural parts of different countries, being significantly affected by this brine mining because it can affect water tables, so it can actually result in them not having adequate amounts of water for farming, and as a result in some countries mining companies have had to engage in profit share arrangements with local communities in order to continue mining. Okay, so DLE is more expensive, but it has a reduced environmental impact. Now, over time, the cost of DLE will come down as it becomes the norm, but obviously then it's not as much of a differentiator for a mining company as more companies use it. Now, page 7 has a lot of information, and that's why I've just included it here in isolation. And the first piece of page 7 is looking at the yields. Okay, so what do we actually get from lithium? Okay, so we say lithium, but lithium can be lots of different types of things. Okay, so lithium carbonate is basically the first yield that we get. So when I was talking about lithium being extracted, it's actually lithium carbonate, and then that's further processed into other compounds. So lithium carbonate can be processed into lithium hydroxide, which is used for batteries. Then we have lithium chloride, which can be used for air conditioning. We have butyllithium, which can be used for rubber manufacturing, plastic manufacturing, and lithium metal, which has a lot of use cases, but one of them is for alloys for the aerospace industry. Okay, so we have lots of different compounds here. Now, this is a key theme, and I think this is really important to be aware of. Governments are reluctant to give mining rights, and there's many reasons why, but the main reason really is around the environmental impact. Okay, so governments are reluctant to give mining rights. However, we should see within the scenarios, and also probably in the real world too, that as we develop more environmentally conscious extraction methods such as DLE, they should be more willing to give mining rights because of this increased demand for electric vehicles and the overall effect that the use of lithium can actually give in helping us to achieve sustainability goals. They should be more willing to give us mining rights. Okay, so in the greater scheme of things, it's better to have electric vehicles than it is to have combustion engines. And so trying to kind of balance these needs, I think governments will probably be more likely to give mining rights if we're using things like DLE. Okay, so that's maybe a potential scenario where we're trying to win mining rights. We may have to make concessions. We may have to pay certain types of taxes. In the state of California, for example, there's certain taxes around lithium and mining, and if you mine a certain amount, you have to pay higher taxes, and these taxes are used for improving the environmental effects that have been caused by the mining, and also to improve the local community and so on and so forth. So we could have those types of scenarios coming up in the exam. Now, Rotomyne is one of 4 lithium producers that make up more than 50% of global sales. So it's a big company. And I think the reason why CIMA have included this within the pre-scene document is basically to say that the organization, when it has supply issues, perhaps this can affect maybe global pricing. Okay, so it's a big company and it can affect global prices of lithium, I would assume. Now, the next piece of page 7 focuses on a futures derivative. Now, I've not really seen this much within the SCS pre-scene documents of late. And what we're talking about is a commodities exchange. Now, there's nothing abnormal about this. This actually is used in the real world for lots of different commodities. We have these markets where derivatives are traded in order to fix prices. And this is really what we're talking about here in the case of lithium hydroxide. So we have this futures derivative. It allows buyers and sellers to fix the price of lithium hydroxide. Nothing abnormal, to be honest, about that, because this is used in the real world. It's also used for other resources like cobalt, nickel, copper, and so on and so forth. How this could be examined, I'm not 100% certain. I don't think you'll have a direct financial strategy type question based on the futures and what way we think they'll go. But I think you could have a question maybe asking you about how a certain strategy or how a certain event might affect the market. It might affect derivatives pricing. I think that could be quite an interesting question, because it would blend financial strategy and enterprise strategy together. I think that's maybe a scenario that could come up in your exam. Okay, so page 8 has a lot of information as well, so that's why I've just included it by itself. Rotomyne owns 6 hard rock mines and 3 traditional brine mines, and head office in Portland. Now, interestingly, within Portland, we have no mines. And this is actually quite similar to the real world, where we have these big mining organizations that have mines across the world, but actually none in the area in which they have a headquarters. And I think possibly you could have a scenario where we have to convince the Portland government to allow us to mine lithium, okay? Because this is something that's going on in the country of the USA. Okay, so we have ginormous mining companies, actually lithium mining companies specifically, and actually there's very few lithium mines within the country of the US. And there's been a change, there's been a shift in the United States' attitude towards lithium mining, because there's obviously inflation going on across the world, and the Inflation Reduction Act, which was passed by Joe Biden, this act actually focused on things like lithium extraction and clean energy as a way to reduce inflation. And as a result, there's been this need now within America to extract more lithium, to control the supply chain, and so on and so forth. So I think you could maybe see some scenarios here where we try to convince the Portland government. I think you could maybe have an ethics type question about lobbying the government in order to mine some lithium within the country itself. Now, manufacturing occurs in plants adjacent, and I think this point here is really, really interesting. It says 2 of the mines are in high-risk countries, okay? So what are some scenarios? What are some themes that I think come up here? There's lots, okay? So the first that comes to mind is that when we have mines in high-risk countries, that means that we have perhaps increased interest rate risk, okay? Also, currency risk could be a major element here, where maybe there's a government engaging in, maybe a nationalization plan or something like that, and that affects the interest rates, the currency rates, and so on and so forth. You could have a situation where maybe there's a lack of oversight in those mines. Maybe there's a lack of control, and then there's a question around the enforcement of governance and so on and so forth. I think that could be a potential scenario. You could also have a situation where there's an election, there's a new government coming to power, and maybe they want to nationalize lithium reserves. And as a result, then Rotomyne has to maybe pay super taxes, or maybe there's restrictions placed on the company in order to force them to divest. Okay, so those are the types of scenarios I see coming up. Now, it's also noted that the company owns a research and development facility, and it says that it develops new extraction techniques, improves products with customers, and provides training and handling for engineers and also to academic staff. And when I'm reading this, I'm thinking about integrated reporting and increasing our social capital and our intellectual capital. So I think integrated reporting will be a key area for this particular precinct. I think that's pretty obvious. But how it will be tested, I'm not 100% certain, okay? So I think integrated reporting is really important to be aware of, thinking about the different capitals, how they're increased, how they're decreased, how they're disclosed. I think that's a really important area to focus on for this upcoming precinct. Okay, so page 9 is, again, really important. There's a ton of information in page 9, so that's why I've just left it as one page. It's noted up the very top that mines are highly automated, okay? And this theme actually comes back into the precinct at a later stage. And this reduces the need to expose workers to dust and fumes, so it kind of manages safety risk to a certain extent. The mines and their associated processing plants are managed locally. And I think this creates a lot of scope for scenarios around control, governance. So, is the Rotomyne board effectively applying governance to the various different mines? Okay, so for example, if we have a mine in a high-risk country, are the rules associated with the mines actually being followed, or are safety rules being ignored in order to increase output and yields and so on and so forth? I could see that being a potential theme within the exam. Okay, so the processing times are also noted. We have hard rock being within days, and then brine potentially greater than 18 months. But do remember that brine mining is cheaper than hard rock mining. Now, Rotomyne sells globally, so it's exposed to currency risk. This is a really easy area for CIMA to examine. So currency risk should be one that you're strong on. So managing transaction risk, and also being able to comment on translation risk and economic risk as well. And this is an important one here, and it's very easy to miss this, okay? So it's just a small little snippet. It says the company's largest customer accounted for 22% of its 2024 sales. So this is a major risk for the business. It's not noted in the business's principal risk report. That could be a question. Okay, so if there's maybe a problem with the customer, maybe there might be a question as to whether the risk committee or whether the board adequately disclosed this risk of being maybe highly dependent on this customer. This customer is a vehicle manufacturer. So I could see another scenario where maybe the business has not delivered, or maybe it's just not doing that well, this customer. And as a result, we may have a question about, should we invest in the customer? Should we try to help save the customer if it's facing bankruptcy, for example? That's not really come up before in the SCS, but I could see that being a scenario. It's a really easy way of testing business valuations, and also issuing debt or issuing equity as well. So I could see that being a scenario, but I think it's an interesting feature. I'm not 100% certain how it would be tested, but that might be one way. Okay, so the rest of the page focuses on the company's mission, vision, and values. And these are really, really important. They are tested fairly regularly each of them. Okay, so not just the mission and the vision, but also the values. So the mission of the business is to power consumers' lives in a world that is clean, healthy, and sustainable. Fairly straightforward mission there, and actually quite a nice one for questions. So typically the mission statement is tested by asking students to evaluate a proposal using the mission statement, or whether the proposal or whether the strategy is in alignment with the mission. And in this particular case, because it has lots of moving parts, you can actually break up the mission and then evaluate that particular part against the proposal or the strategy. So in this case, power consumer lives, does it do that? And then we could focus on clean, and then healthy, and then sustainable. Okay, so that helps us to kind of structure our answer a little bit. Now the vision is quite long, okay, so bear with me here. So meet consumers' needs for the reliable supply of good quality materials and to transform the delivery of power through its support for customers who depend on lithium for their products. Now, what I think is interesting about the vision is that if we think about the vision, it's the desired future position of the organization. And actually in this case, it specifically notes lithium, which I think is a little bit limiting for the organization. And I think why maybe lithium has been specifically mentioned is because it gives scope for CIMA to examine changing a vision statement in response to maybe a new strategy. So if the business, for example, looks to acquire maybe a sodium mine, or maybe even a nickel or a cobalt mine, we would have to change our vision statement because we're not just mining lithium. Okay. And also if the business moves into other areas, for example, maybe it acquires a tech business, and we'll talk about that later on in this lesson, we may need to change our vision. And that's actually been examined before. So making adjustments to the mission and vision statements. So the values are important to be aware of. These are tested fairly regularly, and quite recently the addition to the values has been tested, which I think is quite an interesting topic. In the past, values have been tested from the perspective of whether they should have prevented a certain type of behavior from occurring. So values in this particular case, the first one is to act ethically and honestly. The next is to operate in a sustainable manner. So we see sustainability explicitly mentioned again. Provide a safe working environment, constantly innovate, and be responsive to customer needs. Now, these are important to be aware of, not just from the perspective of answering questions on values specifically, but you can actually use values in different questions. Okay, so they can actually be quite useful for other types of questions as well, just to be aware of them and kind of have in your mind what they are. Now, I know the pre-seen document is given to you within the exam, so you have a digital copy, but try to remember these so that you don't need to open up the pre-seen document within the exam. I think it's really useful at this early stage to have a really good idea of the values, because you can incorporate them in so many different types of scenarios. So we only have 5. You could have an addition or an adjustment or a removal of values. That question has come up quite recently, and I could see maybe that happening for us. Okay, so for example, in a past scenario, there was this accusation of bribery. Okay, so there was a question about whether or not bribery should be specifically added, or the management of bribery should be explicitly mentioned in the company's values. And I think we could actually have a similar type of situation where maybe we're looking to open a mine in a high-risk country, and maybe there's again another accusation of bribery, and then we have a question as to whether we should just possibly have this in our values to show that we care about bribery and that we really don't have any tolerance towards it. So I think that could be a type of question that could come up in your exam. I don't think that CIMA will examine the exact same thing again, so bribery, but it could be maybe something else. Okay, so the next few pages, 10 to 11, these focus on the directors of the organization, the board composition, and as well corporate governance. So what we can take from here is that there are 5 executive directors and then 4 non-executive directors. So in terms of the executive directors, it's hard to see. Obviously, the pages are quite small, but we have the CEO, as you would expect. We have a production director, a HR director, the CFO, the chief financial officer, and then we have a marketing director. Okay. Now, I could see a scenario where perhaps we have a question asking about the appointment of a sustainability director. This has been tested before. Or we could have maybe a question around appointing a new non-executive director with a background in sustainability. So we have 4 non-executive directors here. Maybe there's a question coming up around the appointment of a new non-exec. Okay, so the appointment of directors is a commonly tested area. It may not be as explicit as whether we should have a new director or not, but I think the addition of a new director is probably a fairly likely scenario. Now you'll notice here that there's 5 execs and 4 non-execs, so the balance is a little bit off. This is actually quite misunderstood by a lot of people. So in the UK Code of Corporate Governance, it doesn't necessarily say that we should have 50-50, 50% executive, 50% non-executive. It actually says the board should be balanced. And when we're talking about non-executives, we exclude the chair. Okay, so actually in this case, we should have 2 more non-executive directors appointed to the board in order to have that balance in alignment with the UK Code of Corporate Governance 2024. Okay, so there's a new edition released quite recently. So the board has the standard committees that you would expect. Okay, so the remuneration, audit, risk, and nomination. The reason why I'm smiling is because quite recently CIMA have tested the formation of new committees. Okay, so I could see this being a very examinable area for this particular precinct, because we could have, for example, a sustainability committee, maybe a political committee, maybe an IT committee. Okay, I could see that happening. There's different types of committees that could be formed, but they obviously have the standard ones in alignment with the UK Code of Corporate Governance. I think they could go beyond this, okay? And this is a very examinable topic for this precinct. Now, each committee has 3 non-execs, and it notes down the very end, it's very small, but it is actually quite important. The Chief Internal Auditor reports to the convener of the Audit Committee. And what this basically tells us is that the company has an internal audit department. Okay, so that's good to know. We know that internal audit is a big topic within core activity E. Okay, so it's likely to be tested in at least one variant, if not more. And it also says that the company has quite good governance, because this reduces risks to objectivity. Because if we have, for example, the chief internal auditor reporting directly to the CFO, there's kind of I suppose an issue around objectivity there. So reporting to the audit committee is a little bit better from a governance perspective. Okay, so page 12 is really, really, really important. This is the principal risk report. Now, the principal risk report is an externally focused report, okay? It has high-level risks, high-level descriptions. It's not very detailed, and then high-level mitigation actions, okay? So we're looking at the company's most material risks here. We're not looking at, each individual risk that the business faces. We're not looking at detail. That's more so the risk register. Now, questions have come up before in the past around whether disclosures were adequate within the report. There are some missing risks here, so we will be talking about those in this kind of second portion of this lesson. But really important that we're just aware of the various different risks, what the mitigation strategies are they adequate, and what are some new risks, what are some potential risks that could be added to this principal risk report. So the first risk is that market prices for lithium are volatile, and you would expect this. Okay, so this is a kind of a notable risk for the business. The company manages production in response to demand and prices. That's the mitigation strategy, and it has a close relationship with customers. Now, what I think we could get from this is that there may be a scenario, for example, where Rotomyne or another company has a big discovery of lithium reserves, and what they do is instead of announcing that they have found lithium, instead, what they do is they actually keep this concealed. They keep it confidential in order to keep lithium prices high. Because if they announce that there's this huge reserve of lithium, that could lead to maybe a drop in global lithium prices. Okay, so I could see that being a potential theme, and then maybe internal audit having to protect this information, okay, and keep this information confidential. You also have the risk here of production constraints, and it's constrained by reserves. Okay, so how does the business respond to this? Professionals monitor current reserves and they search for viable acquisitions. Okay, so acquisitions, this is a key component of the strategic level. Specifically talking about enterprise strategy, so evaluating acquisitions, and then finance strategy, so funding acquisitions. We could see a scenario where maybe we purchase a new lithium mine. I think that's a little bit of an obvious scenario, so I don't know if that'll come up, but maybe acquiring a different type of mine. Okay, so maybe a sodium mine or something else like a nickel mine. Now, the next risk is that it's difficult to expand through acquisition, and the response is that the environmental impact of current mines is minimized. I think this is a little bit of a weird response to this risk, but I think what the report is trying to get at is that if the environmental impact of current mines is minimized, it might be easier to convince governments to give us mining rights. Okay, so again, this is where DLE might come in, where it might make it easier for us to convince a government to give us those mining rights. Now, the next risk is that the company has global sales and operations, and effectively what this means is that the business is exposed to currency risk. Now, what's the response to this? Well, in-house treasury teams monitor and manage exchange rate risks. Okay, so this is what you would expect from a business this size. Now, the next, and this is something that we actually touched on already, the locations vary in government stability. And actually, it's explicitly mentioned, as we said, that there are two high-risk locations that we need to be aware of. So what's the mitigation strategy here? The company complies with regulations and maintains close relationships with host governments. There's probably not much more they can do beyond that. There may be questions I could see around, possibly having bribery or maybe a problematic relationship with a certain type of government. I don't necessarily know how that would be tested. Maybe ethics, possibly risk management. I'm not 100% certain. Reputation risk. It's hard to know how this would be tested, but you could have maybe a situation where it's found that Rotomyne has given bribes or maybe certain types of payments in order to sustain a mine in a certain country where maybe the legal framework isn't that robust. The next risk is that operations create the risk of accidents, and this is a kind of an obvious risk that you would associate with a mining company. And to deal with this risk, the company complies with rules and regulations relating to the safe operation of mines and as well has a transparent relationship with regulators. So what I've noticed here, and this is something that we'll talk a little bit more about later on in the lesson, is that there's no mention of cyber risk. Okay, so there's no mention of cyber risk here, even though this is something that could affect the business. So when we don't have a risk reported, there may be a reason. It might not necessarily be the case that the board just forgot, or maybe it's not an important risk. It might be the case that the board didn't disclose the risk, possibly because they were fearful that it may attract cyber criminals. Maybe it might show the strategic importance placed on technology by the business, and as a result, they left it off the report. That style of question has come up before, and then you're basically asked to evaluate whether the justification was sound, whether it was reasonable. Okay, so the next few pages focus on the financials for Rotomyne. Okay, so pages 13 through 14. And interestingly enough, when we look at the year-on-year comparisons, this is not super common for the SCS. There's actually been declining revenues and declining profits. So we see here revenue growth is minus 5%, operating profit minus 18%, net profit after tax minus 22%. Okay, so performance has actually gone down. And we don't 100% know why. Okay, so whatever reasoning we're coming up with here is purely speculation because there's no notes to these financials. So we don't know for certain. What I believe has happened, and this is backed up based on the real world, is that in 2023, it's likely that lithium prices were higher. Okay, so maybe there was a spike in demand and there was this increase in pricing, and that drove very healthy profits. And then as we probably got to the end of 2023, the beginning of 2024, production ramped up. Okay, and that's why we had an increase in our operating costs because we had more mining going on. But maybe every other organization, so it's almost like a game theory, every other mining company saw global pricing and said, right, we need to increase our production. Okay, so we need to have more lithium being mined. And as a result, this led to a drop in lithium pricing, which I believe then caused our revenues to decline. So we had this kind of double-edged sword. We had a revenue growth decline because of the drop in lithium pricing, and then we increased our mining, which had the effect of increasing our operating costs, and that then led to this decline in revenues and profits. I believe that's the case, okay? And we'll see in the next slide why possibly this is backed up by additional information within the preceding document. So I'm not a big believer in having loads of ratios, calculated ratios that you'll probably never use. I believe it's important just to look at some very key ratios that you could integrate within your answers. So the first ratio is the tangible assets to total assets. And the reason why I include this is because it helps you to support questions around the raising of debt or possibly even equity as well. What this shows in this particular case is that we have a lot of tangible assets that we can use for collateral. So if we're looking to raise debt, and as you would expect in a mining type organization, we have a lot of assets here that could be used as collateral base. And I think this supports the use of debt to a certain extent. Now, when we look at gearing, and the reason why I'm a bit hesitant to say that, we should have debt in this organization, gearing is quite high. Okay, so it's 51%, which would suggest that if we were to increase our gearing further, there's this increase in finance risk, which could actually have a negative effect on our share price as shareholders get a little bit concerned about that increase in finance risk. So the gearing is quite high. You may have questions about possibly debt covenants. So exceeding debt covenants has been a past question where debt covenant thresholds may be exceeded as a result of raising debt, and we have to manage that. So how do we do that? How do we approach the bank or the lender? Gearing here, again, we don't really know just based on this percentage whether this is normal for the industry or not. We'll see that in the next slide. So the effective interest rate is calculated at 10%, and the dividend payout ratio here is 89%. So 89% is very substantial, okay? So a huge portion of our profits were paid out in dividends, and it's likely the case that shareholders appreciate this because of the clientele effect. Likely it's the case that our shareholders like having this dividend payment. They're likely invested in the business for this dividend, and so making adjustments to our dividend policy could have a serious effect on our share price. Okay, so if, for example, we actually have a further decrease in profits and we're unable to meet dividend expectations, that's likely to cause a drop in our share price. And we could actually have questions on that within the exam, changing our policy or maybe warning shareholders about a potential lack of dividend or a lack of dividend that meets their expectations. And that's been tested a few times in the past. So pages 15 through 16 look at Lithdig. Okay, so Lithdig is a competitor. They're also based in Poland and they're basically doing the same thing as us. And let's look at their financials. So interestingly, they also had the same revenue decline, 5%. They had a drop in their operating profits and their net profits after tax as well. So that supports my hypothesis that it's not necessarily reflective of the company's performance, but actually more industry. Okay, so more of an industry effect because this company, Lithdig, they've had pretty much the same set of results as Rotomyne. So key ratios, and the reason why we calculate key ratios for the competitor organization is to get a sense for the industry standard. Okay, and I think that's why CIMA include the competitors' financials within the pre-seen documents. So 78% for our tangible assets to total assets, pretty much the same as Rotomyne. We have gearing at 25%. So gearing is much lower for this organization, which suggests that it's not necessarily the case that every business in this industry has quite a high gearing ratio. It may just be Rotomyne having a high amount of gearing. We have an effective interest rate also of 10%, and then we have a dividend payout ratio of 50%. So this business pays out much less of its profits in dividends. And that again suggests that it's not necessarily the industry standard to pay a high amount of profits in dividends. So we could see, for example, a scenario where we have to change or adapt our dividend policy, maybe to fund a certain strategy. And we could support this by saying that, well, other organizations within our industry don't necessarily have the same dividend policy as us. So it's not necessarily an industry norm. Okay, so page 17 shows us the share price, and I think this is quite an interesting story for Rotomyne. So it's hard to see, but just based on the wave that we can see, the very beginning, the share price is quite small. Okay, so relative to where it goes, and we see this big ramp up as we go through time, and this is likely due to an increase in demand for electric vehicles, and then we see a drop off. Okay. So the share price, just some key callouts here. The peak is in August 2023 and it's at $28. Now, you'll have to forgive me. It's actually quite hard to exactly pinpoint the dates and exactly pinpoint the share price. I've tried my best. We don't know exactly, but this generally speaking is the case. Okay, so August 2023, the peak was at $28, and then the trough, which is the lowest point, was in October 2020 at $2.50. So we've seen this big ramp up over time, and again likely due to global lithium prices, which are affected in our case probably by demand for electric vehicles. It doesn't really say that, but that tends to be the case in the real world. So we've had this big drive for electric vehicles. Could be the case that they're more popular due to customer demand. Could be the case that governments are giving grants for them, and as a result, or concessions like having lower car tax or lower insurance, and that's driven this demand for electric vehicles. And as a result, then we've seen this big increase in the company's share price as those types of companies, those car manufacturers, have purchased lithium from the company. So the beta is 1.63. Now, this basically means that the share price is more volatile than the overall market on average. The beta might change, okay, so there have been questions in the past around what could influence beta, so just bear in mind that even though it's 1.63 here, it may change within the exam, or you might be asked about how it might change in response to maybe raising debt or maybe acquiring another business. Now, the next few pages look at the supplementary information, and these are really, really important for the SCS. Typically, it's the case that some of this supplementary information is used to create scenarios. Okay, so we could see some of this coming up in an exam scenario. Not these pages though. So these pages for Happy Comic, and actually CIMA have used these several times. These tend to be used for giving some explanations around the industry. So kind of going into more detail about the industry and why things are the way they are. So what the Happy Comic in this particular case focuses on is rechargeable batteries and recycling. Okay, so basically it says that rechargeable batteries, they deteriorate every charge and recharge cycle, and they note that recycling lithium batteries is possible, but it requires a lot of time and energy. So what I think could happen maybe in the exam is that there's a purchase of a tech business, maybe kind of a high-tech business that looks at recycling lithium. So maybe a new innovative process for extracting lithium out of these used batteries. That could be a type of scenario. So, that opens up questions around business valuations, for example, and integration, which is a kind of a common scenario. So integrating a new business within our business. You could also have a question where maybe there's a scenario around acquiring a recycling facility. I think that's a little bit obvious, but that could come up. Okay, so it has actually come up before in the past around purchasing recycling facilities and waste facilities and so on and so forth. So mine location is noted as being important because it can affect transportation costs, and as well, if we have higher purity ore or higher purity brine, it can be cheaper and easier to extract. Okay, so page 20 is a really, really interesting page. And I think what this page basically says is that there's going to be a cyber risk type scenario on the exam in at least one variant, if not more. So the article at the very top says OT is a new threat vector. Okay, and OT is operational technology. And this is basically a combination of hardware and software that monitors and directs the operation and control of equipment, processes, and events. So basically it facilitates this automation that we were talking about before within the processing plants. Okay. Now, also noted here is ICS, internal control systems, and this basically enables communication and coordination between equipment and machinery. So this allows basically equipment and machinery to talk to each other. And what the pre-scene says here in this particular article is that, this ICS, it was never really a risk because it's not that sophisticated in terms of cyber risk. Okay, it's not something that necessarily would be controlled remotely. But over time, as technology has developed, ICS can be connected to IT networks, and this creates opportunities for unauthorized breaches. Now, I could see a situation where possibly there's a ransomware attack, where there's some form of hacking attempt, social engineering, and so on and so forth, that targets this area specifically. So the IT networks connected to ICS. You could have maybe a very interesting scenario where it's a foreign government, okay, that's looking to cause damage. So maybe they pay a hacking group to do something like this. That type of scenario has actually come up before, believe it or not, within the SCS. You could have maybe an ex-employee, okay, so maybe a disgruntled employee, or you could just have cyber criminals looking for money, okay? So I think this really says to us that there's going to be a cyber risk, a cyber attack type scenario on the exam, which, to be honest with you, tends to be the case anyways, because cyber risk is such a big component of the SCS syllabus. Now, page 21 talks about basically sodium ion batteries. Okay, so there's a bit of information beforehand, but basically what it's getting at is sodium ion batteries. It starts off by saying that wind and solar panel can be inconsistent in their delivery of power. It says one solution to this is to use batteries to store any surplus energy that's generated. And although lithium batteries are very good for cars, they're too expensive for this particular task. So one of the potential solutions in the future is the use of what's known as sodium ion batteries. And these are basically cheaper than lithium ion because sodium is a more abundant resource in the world. It's cheaper to mine as well. And they said in this article that it should be commercially available by 2030. Now, in the real world, MIT suggests it could actually be available by 2027, I believe. And it's noted that it's unsuitable for electric vehicles due to weight and size. So I believe this could be a future strategy for Rotomyne, maybe getting into the lithium mining industry, or maybe you could get a surprise scenario where actually the business moves into acquiring a battery developer or a battery research and development type organization. And I think that could be quite a fascinating scenario, because it would change maybe the mission statement, the vision statement of the business. You could have integration issues. It's not necessarily a mining company, so I think that creates more opportunities for testing material. These are, again, all hypotheticals. I'm not 100% certain what will come up in the exam, but I think definitely sodium ion batteries are going to feature in some shape or form. Now, interestingly, in the real world, the company BYD, which is a Chinese car manufacturer, it's a huge business. They recently invested in a facility that actually researches sodium ion batteries and how they can be used in electric vehicles. So even though it says here that they can't really be used for electric vehicles due to their weight and size, over time it's expected that they actually can be, and they will be in the future, okay, because they're cheaper as well to produce. That's a big selling point for a company, okay? They're able to reduce the cost of their cars. Okay, so page 22 talks about geologists. And it's quite an interesting piece here to include. So basically it just explains what geologists do. They look for resources that can be extracted. So basically they look for lithium, they look for nickel, cobalt, copper, diamonds, and so on and so forth. The demand for geologists usually exceeds supply, and I think that's quite an interesting statement to make, okay? And I'll talk about why in just a few minutes. Basically, it says that it can be rarely possible, this is within the article, to be 100% certain as to what lies beneath the Earth's surface. Therefore, even though there's clearly materials present, we need geologists because these materials could be low grade, it could be insufficient to justify mining, or the surface area is not sufficiently stable to mine safely. So basically, the geologist plays the role of sampling and making sure that the area is commercially viable, okay, that it is mineable. Now, why I think this has been included is because it shows that we're dependent on geologists to a certain extent in this industry. And what you could have is maybe some digital disruption through new software or AI-based models that can predict where certain reserves will be across the world. Okay, so there is actually software out there. Now, it is a little bit experimental at the moment, but basically it takes satellite imagery and it also takes geochemical and geothermal data, and it puts it together and it can create models as to where certain types of minerals, where reserves of various different could be gold, could be nickel. We're talking here beyond just lithium, but let's say in our case lithium, it would show where commercially viable lithium reserves would be. Okay, so that's quite disruptive, and the reason why I kind of highlighted the fact that this demand for geologists usually exceeds supply is that this type of software would disrupt this. Okay, so it would change the role of a geologist from maybe looking for resources, maybe more so towards testing. Okay, so in the testing phase, because the software is limited as to what it can do in terms of testing, but it can certainly highlight the areas where we should be exploring. Okay, I think what you could see beyond this is maybe some scenario planning questions around whether we should dig, whether we should go further with a mine, or whether we should leave or abandon based on sunk costs and so on and so forth. So I think you could maybe see some scenario planning, stress testing based on exploration. I'm not 100% certain how exploration would be tested, but I think that could be a scenario, or maybe this scenario around the use of AI, the use of technology, because remember this question, how does a certain piece of technology, or how does a software affect a company's ecosystem? This is a very popular question for CIMA to examine, and they like testing ecosystems. So I think this would be a way for them to test ecosystems, because we would be examined likely, if this comes up, on how this software would affect the ecosystem of Rotomyne. Okay, so I think we could see a software type question coming out of this. Okay, so some pre-seen insights. So these are the callouts that I talked about at the very beginning of this lesson. So the first is cyber risk, okay? So interestingly, and I noted this, there's no mention of cyber risk within the principal risk report, even though it's flagged in the article as being a potential threat vector, okay? So there's no director as well in the company that has any specific responsibility for cyber risk. So I could see this being a potential vulnerability, or maybe there's a reason why the risk hasn't been noted on the principal risk report. So perhaps the board felt as if it would maybe flag the strategic importance that's placed on technology, and as a result, they left it off the report, and maybe you're asked to evaluate that. Now, digital leadership is somewhat similar. So there's no single director that has explicit remit for digital strategy or technology. I think that might change within the scenarios. You could maybe have a question around the appointment of a CTO or a CIO, Chief Information Officer, Chief Technology Officer. I'm not 100% certain, but if the business looks to acquire technology businesses like an AI business that searches for reserves of lithium, then you could see a justification there for having a CIO or a CTO. Now, the government in this particular case is a really important stakeholder, okay? So I see political risk being a big element of this pre-scene. I think you'll have questions on political risk, dealing with the government, the ethics of lobbying. I see those all being potential scenarios. Now, sustainability is probably the most obvious theme, okay? So I should have really put it number one here, but to be honest, it's probably so obvious as a theme that I probably didn't even need to write it, okay? So what I see here from sustainability in terms of testable materials is I think integrated reporting is highly testable. UN SDGs, I could see maybe questions around risk management possibly factoring in here to do with sustainability. So I think this is a really, really important topic. Integrated reporting in particular in the various different capitals, highly testable. So make sure you're fully up to speed on those. The futures exchange was an interesting element to add into this pre-scene. I think a lot of students will be panicked about it because they'll be thinking about interest rate futures and also currency futures, which are typically misunderstood by students. I don't think they'll be tested technically, anything to do with futures. I think what will happen is you may have questions about how different events might impact derivatives pricing. Okay, so I think it's a great way for CIMA to blend in financial strategy and enterprise strategy together, looking possibly at how scenarios or how different events influence global markets and how actually maybe Rotomyne affects those markets, because it is quite a big company. Governance is interesting. I think in this particular case, the business has reasonably good governance from what we can see on paper, but I think what may happen within the exam is that one of the mines, maybe in a high-risk country, may face significant issues, and perhaps there may be a question as to whether the company failed in its role with governance, and as a result that led to the issues. Okay, so possibly it could be the case that the internal control system is inadequate and maybe there needs to be changes. Okay. As well, it's important to note that the executive to non-executive ratio is suboptimal. That's something that we discussed. Now, something we didn't discuss is that the chair shouldn't be on the audit committee. This is actually explicitly noted within the UK Code of Corporate Governance. However, I will just stress here that this has been the case in nearly every single CIMA pre-scene document. So I don't really see this being a big issue within the exam itself. Now, the financials are very interesting for this business. It's rare to see financials deteriorating within the SCS. I think this is quite a useful fact to be aware of going into the exam, because you can actually incorporate this into various different questions. So let's say, for example, you're given a question on executive remuneration. And this has actually been a testable area before in the past. And maybe there's a question around whether it's justifiable to increase the remuneration packages of the directors because of some event, or maybe there's been a drastic increase in performance and as a result they are all looking to increase their pay packets. Okay, so we could have maybe in our answer some information about the fact that the financials of the business have recently deteriorated. So shareholders might not necessarily feel that it's appropriate to increase remuneration for directors when actually the financials of the business have decreased quite recently. So again, that's all about application, using information from the pre-scene. I think it's really useful to have this in your back pocket. You can use it in various different questions. The exact questions I'm not sure, but I did just give one example there. There's plenty, I'm sure, out there. Okay, so the committees on the board, we know that they have the standard committees that you would expect to see. They may wish to form new committees. Okay, so this has been a common enough question from CIMA in the last few sittings. I think it might be too obvious to ask you whether the business should establish a sustainability committee, but it could come up. Okay, you could also have political, ethics, IT. In the real world, businesses have lots of different types of committees beyond the standard 4. Now, future strategies that the business can pursue, it's hard to know. Okay, so we don't know exactly, but these are ones that I think are realistic. So recycling lithium, possibly, engaging in research and development in regards to recycling lithium, maybe purchasing a business that does this, or maybe even just purchasing a recycling plant, acquiring new mines. That doesn't necessarily mean just lithium mines. So it could be the case that we acquire lithium mines, of course, but I think maybe that might be too obvious. Moving into sodium mining, maybe even just acquiring a sodium battery manufacturer, as we were saying, sodium ion batteries. These all seem logical. Okay. Now, of course, there could be other ones. There could be more obscure ones, but I think those are the most logical ones. Now, currency risk is a really important element of this pre-scene. We didn't discuss it too much, but it's noted that the business trades internationally, so it faces transaction risk. It has overseas subsidiaries, so it has translation risk. And actually, if we look here, the company is carrying a negative 438 million currency reserve. Now, this seems bigger than maybe of an issue than it really is, because the business is gigantic. So this number, whilst it is big, within the scope of this particular business is not necessarily hugely material. But over time, as we have more translation losses, it could be the case that the reserve decreases equity to the point where our gearing ratio increases above a debt covenant threshold that we've agreed to. So there is a necessity in some cases to manage this risk. Okay, so we don't know if the business has signed up to any debt covenants. We don't know that information, but we can always say in our answers, possibly around raising debt, that if we increase this reserve, it could lead to a deterioration in equity to the point where we actually breach debt covenants related to gearing ratios. Now, acquisitions and joint ventures are a key component of this industry in the real world. So acquiring mines, acquiring businesses, mining companies, getting into joint ventures in order to open a mine, very common in this industry. Also divestment. Okay, so with acquisitions, we have divestment. It may be the case actually in this particular pre-scene that one of the mines is sold off. Okay, so maybe a high risk country, maybe it's too much of a risk, and as a result we sell it off, maybe to fund a future strategy. That could happen. Maybe the entire business is sold. Okay, so maybe it's purchased by another mining company. I don't know how likely that is, but that has actually been a past scenario before where we have to deal with being acquired. And maybe we actually may acquire another mining business altogether. Now, past case studies here, Hot Air, which was the November-February 23, and Die-Struck, which was the May-August 23, I think they're worth looking at in terms of the exam questions that came up before, because there were a lot of questions related to sustainability in those two pre-scenes. Okay, so in the 6 variants each, I think you should look through the questions. It doesn't take that long to go through them, but just have a look at the subtasks that came up and see would those be applicable to this particular pre-scene. Okay, now not every question will be, but there are some really interesting questions that came up before, and I'm actually thinking about Hot Air in particular. There was a question around greenwashing. So they had this chart that was within their sustainability reports, and it was inadequate. It kind of gave a misleading picture. I could really see something similar coming up for this pre-scene, where possibly there's a chart that shows carbon emissions going down, but actually what's happening is the business just has less mining operations, or maybe there's an increase in brine mining, which doesn't have as much of a carbon emission effect. So I could see something similar coming up for this particular pre-scene. Okay, so that represents the end of this lesson. I want to say thank you very much for viewing this. I'll see you in the next lesson, where we will be discussing the industry insights, and then after that we'll be looking at some potential scenarios in detail. I know we covered off some in this lesson, but we'll be looking at them in detail. Thank you very much for joining me, and I'll see you in the next one.